All right, congrats to all students on yet another record-breaking week. In September alone, I have counted over $1 million in profits from students. So this is an incredible time for us. But today I want to talk to you about Baba, Alibaba. I tweeted this last night before they IPO'd. I said, Baba is irrelevant to those who trade with an edge instead of an addiction. Congrats, financial joke media outlets, gamblers, Friday is your day. So and I got a few retweets and favorites because it's pretty much right. When you talk about playing these hot IPOs, and I've never gotten more emails about any stock than Alibaba or when Facebook IPO'd, this is when the financial media really jumps. Everyone's like, oh, the stock market is interesting. What's this IPO going to do? Irrelevant. Totally, totally, totally irrelevant. I know that we are a society of gamblers, and I teach penny stock trading, so some people would say I'm a gambler. But what I look to do is to trade with an edge. Okay? When I'm shorting a pump and dump, I know that that pump is eventually going to collapse towards zero. So I'm just working my way back kind of going back in time when I know it's already going to go to zero. I go back in time and I say, how is it going to get to zero? And that gives me an edge when I short sell pump and dumps, or when I'm buying an earnings or a contract winner. And I've seen so many earnings and contract winners, the stocks have doubled or tripled or quadrupled over the next few weeks and months. I go back in time. Again, I have a time machine, and my time machine is strategy and knowledge and experience. And I say, how did this stock double, triple, quadruple? Oh, wait a minute. Every time it broke out, it was a good time to buy. And sometimes when an earnings or contract winner, faded a little bit and I dip bought it near support, that was also usually a good time to buy it in the past, in previous examples. So I use these previous examples as a guide to giving me an edge on future trades. That is why I'm rich. That is why my top students are rich. Anybody who follows this philosophy gets rich. Those of you who like to trade Baba and Facebook and scalp $1 or 50 cents and feel the rush, you do not get rich for the most part. Some gamblers are very good, but the vast majority of gamblers and scalpers and day traders do not get rich. They lose money. And this is the secret to my success. So you might think, oh, Friday, Tim's not even going to trade. Baba, he says he's irrelevant. Okay, he's a party pooper, but he's not going to trade. That would be wrong too. Just because Baba is irrelevant does not mean that there's not going to be sympathy plays. And I love sympathy plays because sympathy plays, unlike pump and dumps or contract winners, keep on happening again and again surrounding hot IPOs. There are a bunch of sympathy plays for Facebook. There's a bunch of sympathy plays for Baba. So I like playing sympathy plays because, again, I go in my time machine of experience based on wisdom and success, and I see that sympathy plays like to jump for a day or two, and then they die because they're not Alibaba. And it's just hype related to Alibaba. So first, let me talk to you about different tweets. There's a lot of different tweets that I'm about to show you from various ways to play Alibaba. This is perhaps the best way, right here. We love this alert from Profitly/Superman, and we are very proud to have Superman as one of our gurus on Profitly. He catches momentum before it happens. Sometimes he really nails it. And so he bought 25K of CNET at 132. It had 17 retweets when I made this video. Let's see if it's up to 20. Come on. Yeah, 20. Awesome. Austin got in at 197. He made 371. My first day trade and already made 150. Love this. And these are just a few people. But buying it at 132, let me just show you what CNET is. He alerted it right here. And, it came down for a little bit. There was time to get in. Even if you didn't get in right away, like you could have gotten in the 150s, 160s, 170s, and it jumped all the way to 250. And right now it's at 233. And I can almost guarantee you that this stock will fade. I'm not touching it right now. My play was to short it right here. I shorted it at 245 because I like betting against sympathy plays. I didn't know this was going to be a really big winner. And, I'm not necessarily shorting it here at 150 when it's only up from 118. But when it doubles or nearly triples in a day, that's when I'm like, this is getting a little insane. And when you have this huge run up If you watch my DVDs and you look at supernova chart patterns, every now and then I like to short into madness. And I shorted in the 240s and I covered in the 220s. It actually went all the way down to 199. So I had a nice 20% win myself. But Superman, awesome, awesome freaking alert. All of you guys should have his newsletter if you want to really find these huge winners. He's not right 100% of the time, neither am I, but he really understands. And this was a sympathy trade to Baba. Let me show you a few more tweets. Here's penny stock people, bought CNET at 235, sold at 250, only held a small position. That's fine, and he's a penny stocking silver subscriber. It's not about making, $10,000 on every trade. It's understanding the process. My millionaire students understand the process. Sometimes you buy at 235 and sell at 250. Sometimes you buy at 205 and sell at 250. Sometimes you buy at 235 and you sell at 270. The point is you can make 10, 20, 30 cents a share, and in this case, that would be, 5, 10, 15% in a day. The vast majority of the finance world is still stuck on trying to make 10, 20% per year. It's a joke, but they think that penny stocks are unpredictable. They're not. Again, if you use my time machine based on wisdom. Here's Alice says, thank you, Timothy Sykes, for your teaching. Stayed away from the death trap called Baba. So in the chat room, I'm trying to tell people to, ignore Baba. They can't help themselves. They're degenerate gamblers. So they're buying it 92, 93, 94, 95, 96, 97, 98. And, I put out a commentary. I was like, I would not be long Baba at 97. And people are like, to 100 plus. My own chat room loves to ignore me because, again, I'm a party pooper. I understand that what I teach is not the most fun, but it's the safest. And sadly, as usually happens, when Baba started tanking, and I don't know where this ends up, I don't even care, but typically you have this hype and then this crash, and sadly, all the people who were buying in 92, 93, 94, 95, 96, they never said when they sold. That means that they're probably still long, and now they're down. And they're cursing themselves, and they say, trading isn't for me, the stock market is so unpredictable, how is Baba going down? It's because you're playing a guessing game stock, and it's because you're breaking my rules. Yesterday I shorted AVNR. Let me just show you AVNR. AVNR is this terrible biotech. They need cash. They had a nice press release. They got a nice upgrade. But when it cracked, right here, 1190, my top student, Tim Grattani, actually tweeted this. And he reminded me of the chart pattern when it cracked 1190 because that was a technical support crack. I shorted at like 1076 or 1176. Broke 1190, my bad. And I got out like a wuss. I made like a little over 10 cents a share. This isn't my ideal kind of play. I don't like trading biotechs. But today, it dropped over $1 a share. I'm sure Tim Grattani banked. He probably made another 10 or 20,000. Last time I talked to him, he was up 30,000 on the week. That puts him over 2.1 million. And he's shorting this stock because it's a pattern that he's gotten very good at. When I was shorting NETE the other day during a live trading challenge webinar, you trading challenge students remember this trade. I was shorting this at 411. And some people are like, Tim, why are you shorting this? This looks like it's never going to stop going up. Again, I went into my little time machine and I said, how many times have I seen this pattern with this spike, especially with a company like this that has a lot of debt, and those debt holders are selling their stock into every spike? And I shorted at 411. And I covered a little too soon in the 380s, but now it's in the 260s. You could not have lost money right there. It's not a guessing game. It's not Alibaba. These are predictable patterns. That is how you get rich. Whether you want to buy CNET with Superman, or maybe you've learned from Superman, you've learned to spot stuff ahead of time, that's fantastic. Here's six-figure traders. His name is Corey. He's one of my longtime trading challenge students. He shorted AVNR. He made $4 grand. Awesome. This was my other one. Here's Jalen White. This really pumps me up. $80,000 since last Wednesday. Take me to the bank. I have to retweet this. I didn't even retweet this yet. That's crazy. And people say, oh, there's no way. There is a way. If you focus on the patterns that I teach instead of guessing games. It's amazing what's possible when you focus with a specific strategy, a very logical strategy. And here's, somebody replied to this properly. My first day trade and already made $150. And it all starts small. Some people are going to crap on, $150, a penny stock. Wall Street doesn't care. You're right. Wall Street doesn't care. Wall Street does not give a damn about stocks like CNET or $150. And yet, for the vast majority of people out there who have $500, $1,000, $5,000, $10,000, $50,000, making a few $100s on a trade, and more importantly, learning a pattern that can work again and again. CNET is just an Alibaba sympathy play. Next time there's a new hot IPO, there's going to be another type, penny stock like CNET that's going to spike. And it doesn't even have to necessarily be a hot IPO. When Tesla starts spiking, then you can start buying all these little electric vehicle maker sympathy plays. And they usually spike for several days, if not weeks. Same thing with Chinese internet or mobile internet or gold stocks or oil stocks or, alternative energy, plug power. I mean, there's so many. This is not a coincidence. This is not a one-time event. Alibaba is a one-time event. And this is why I'm so against it. Because even if you make money, let's say on Alibaba, this is what I criticize, but it's funny. Somebody found shares to short and they shorted like 100 shares. A few people posted like that, shorting at 99, 98, 97, 96. And they're covering at 94, 93, 92, 90, maybe 91. And they're making a few $100. And they're like, Tim, look, I made a few $100. Yes, you made a few $100, but you also risked a lot, Alibaba could have easily gone to 120. You don't know the exact top. Because it's a one-time event, there are no, precedents that you can use to really say, oh, there was this other $200 billion IPO. No, there wasn't. Facebook was a big IPO, but that stock didn't act anywhere near like this. If you focus on sympathy plays, the sympathy plays do act very, very similar. If you look through my video lesson library, it's not like CNET is the first sympathy play, okay? This is not the first, this is not the last sympathy play. So when I teach you to make a few $100s or a few thousand, it's not just about that money. And I know it's difficult for you to see this. What I found is that people with small accounts, they don't understand the big picture. They're so focused on trying to scrape by and do whatever it takes to make $50, $100, $200, or even if they make $20 in an hour, and they're like, well, my normal job only pays $13 an hour, so when I make $20 in a trade, that's a good trade. No, it's not necessarily about the small amount of money that you're making, okay? It's important to grow your account, yes, but it's much more important to focus on predictable plays. Let me give you an example, EFUT. This is another Alibaba sympathy play. It's been doing nothing. It spiked right here, okay, from 470 to 495 because they're a Chinese retailer, internet kind of play. And it went all the way to 550. I missed that. And because this stock can spike big in the past. I mean, it spiked $2, $3, $4 a share in a day. When it came back here to the fives, I said, you know what? This 498 should probably act as support. What's my risk? If it goes down to the 480s, I got in here in the 511s, 510s, 512s, and it went back to 550. I should have sold all right here at 550. I didn't expect it to double top. But by understanding how sympathy plays work, understanding that, there's multiple waves. You see, this one double topped and then faded. CNET, well, I guess it double topped and then faded a little bit too. But you don't know how far these things can go. I don't mind being long EFUT on the dip after it's already spiked in the past because it can spike again. I wouldn't chase it here at 550, but again, this comes down to me understanding how sympathy plays work. It's okay to buy sympathy plays on the dip. Look, CNET, if you bought it here on the dip here at 2 and you said, Sykes is an idiot, let me dip buy it on this 50 cent a share dip. Well, guess what? You could have made 60 cents pretty quickly, and even right now you'd be up 37 cents. So there's multiple angles. I don't care if you buy these stocks. I don't care if you short them. I'm just trying to show you various angles. EFUT, when I bought it at 511, I expected it to pass this 550 level, and I would love to sell in the 570s, 580s, 590s. Not every trade goes as planned. So I, sold at like 530. I made like my 20 cents. I made my 20 cents on CNET. I didn't trade either of them perfectly. CNET, I could have made 50 cents or 45 cents. On this one, I guess I could have made like 30, 40 cents. So I didn't capture all of it. But again, I'm using predictable patterns. I'm using past examples as my guide. I'm taking solid profits, and that's why my account grows gradually, just like so many of my top students. So get in the game, trade the right stocks. Don't gamble on guessing game media hype BS. and have a great weekend. Study those video lessons, guys. Thanks.